Years ago, one of my very best tennis students used to like to play a little game. Oh, it was such a fun game. We used to get together for lessons, and we'd go over something simple, but something super important. Something that could change his game, something that could help him dominate. And he was a very good player, very smart young lad. And we'd go over it, and he'd say, "Yeah, that's easy. I should do that." And then he wouldn't do it. And days would go by, weeks would go by, and this simple, life changing fundamental just never saw it. And then, suddenly, out of the blue, he would start doing this simple little thing like maybe it's slicing the approach shot cross court to the backhand. It wasn't life changing as far as complication, but it was life changing. And like I said, after not doing it for such a long time, all of a sudden he would start to do it, and it would work, and his game would go up a level, and he'd turn to me with a little smile on his face and say, "Why didn't you tell me that sooner?" And I just wanted to throw him off of a cliff. Okay? Because my response was always, "I told you that months ago." And this happened many times. And oh, it was so much fun. That wonderful time in my life reminded me of this video. Because this is exactly the same situation, except it's me who's torturing me. Now, when it comes to my trading, I've been very, very, very focused. I pick one thing at a time, and I just do it and do it and do it and do it. I'm great at ignoring things. As you know, I don't care about the next big thing at all. I just want to master one thing. And golly gee, that's what people tell us to do. And I might even advise someone, if they ask my opinion, to do the same thing. Focus is good, right? But here's the problem with focus when it comes to trading. And this is the lesson that it's taken me a long time to learn. Maybe I've been in denial. But drawdowns are coming. They're coming for you. They're coming for me. And when you trade just one thing, here comes the drawdown. And then what do? If you're just doing one thing, that's it. There's nothing to do. You just wait it out. Just wait it out. That's great. So much fun. No, it's not fun. But, if you're trying to build wealth, it's one thing to get rich. It's another thing to be wealthy, right? But if you're trying to get a lot of money in trading, that drawdown period is awful. And what would a wealthy person or a rich person do when they just had one business and that business went into a drawdown, cyclical, whatever? Would they just ride it out as profits shrink month after month after month? They're focused. They're committed. But that drawdown, when that one thing is just terrible. So what's the way around that? What do the wealthy people say? This isn't new, right? This isn't landmark. But what would they tell you to do? They would say, find multiple income streams. Because if you have businesses that aren't related, then this one is cyclically down, not easy to say, while the other is up. So instead of the drawdown, you get a little loss here and a little win there. And the more you get these multiple income streams coming in, the smoother the ride. Wow, I've never heard this before. Well, then how come I haven't listened until recently? Now, I make this video after several months of taking this own advice, my own advice, or someone's advice, someone smart's advice. So I'm not just winging it around as we do on YouTube and just throw out ideas and try to get clicks, right? This is something that I've seen with my own eyes and makes me want to throw myself off a cliff, okay? But specifically, we talked about business. What does this look like in trading? Well, that's what we're going to do in this little video. Now, these aren't actual numbers. These are tested numbers. Past performance does not indicate future results. Do not risk spending money you cannot afford to lose, and read it all. Read it all. Okay. Now you think, okay, well, I can do that. I'll just get a bunch of different ETFs, or I'll buy one medicines hospital stock, and I'll buy a tech stock, and I'll buy a value stock. Guess what? Doesn't work. Diversified stock portfolios don't work. Well, not the way we want them to. When the stuff hits the fan, they all go down when times are bad. It's not diversified if it's just stocks. It's essentially just one thing. Again, this is nothing new. But what I've learned, breaking news, newsflash. If you go to more than one place for your income streams, it smooths it out. Now, currently, for a long time, I just did Forex, okay? You probably know that. Forex. That's all I did. In fact, I just did one robot in Forex for many years, plural, right? Hundreds, thousands, plural, of hours. Lots of plurals in there. But right now, over the past year and a half, who knows how long? It's been about a year. Now I'm doing Forex. I'm doing futures, live trading, stocks, live trading, options, live trading. Doing it all. Live trading. Not simulated, not guessing, not trying to get YouTube watching video clicks. Okay? I'm actually doing that. So, those are all different. And it seems like they're diversified. I hate that word. Let's put one together and find out what it means to come from a bunch of different angles, shall we? All right, number one. And I'll talk about the settings in a second. Don't give me an angry comment. Don't you dare. End of month RTY, right? That's the Russell. This is futures. We're starting with futures. This is an end of month system. It's embarrassingly simple. It's not mine. I didn't create it. I found it and I forget where. If I find out where it is, I'll send you that way. Didn't make it up, but it's the end of the month on the Russell, the RTY. If it's above the moving average, then you go long. If it's not, you pass. You simply don't trade. So if the RTY is above the moving average and it's the end of the month, literally the last day, 29th or 30th, whatever it is, this is automated. It's a robot. I don't do it discretionarily, which is why I'm giving terrible rules out. But if it's above the moving average, end of the month, you just buy and you hold it for a day. Complicated, right? This is what it's done since 2008. I could have gone back to much farther, even to 2000, but I didn't. 2008 was good enough, at least for now. And this is what it's done. Pretty crazy. For one trade, doesn't even trade every month. And look at that equity curve. Holy macaroni. Now you say, well, there's a losing year. I get it. It doesn't trade that much. But man, that's pretty profitable. I mean, your SPY, your index fund, has these red years, okay? So don't give me that. I know you weren't giving me that, but still, I'm very sensitive. Nice equity curve, nice. Okay, that's an income stream. Let's go somewhere else, shall we? How about the QQQ? That's different. It's an ETF. It's in the stock market. Totally different place. This is a daily RSI system. Super simple. If it's above the moving average, you go long. It's a long-only system. If the RSI goes into oversold, you buy it. And then when it gets to overbought, you get out. So you get in when it's oversold. You get out when it's overbought. No stops. It's so simple. Again, I'm sorry. It's embarrassing. I can make complex systems. Believe me, I could dazzle you with complexity. But this is simple. Well, let's look at this. 2009, that seemed to work. In that terrible bear market of 2009, of course, some of it wasn't bearish, right? Well, that worked for 1, 2, 3, 4, 5, 7 years in a row. Oh, then it didn't. Then it did. Then it didn't. Ooh, it's been good lately, and it's doing well this year in 2023. Here's your mini equity curve. Now, here's the problem with that. Even though the winning percentage is great, and it trades hypothetical $10,000 of stock each time, the wins are tiny. So if we started with a hypothetical $10,000, $15,000 account, we didn't really make that much, right? These are tiny wins. Think about that. $10,000 account, it didn't even make 10%. Well, that's worthless. I know you hate it, but I'm just showing it to you. It is an income stream that's really pretty stable and just kind of chugs along with a nice high win percentage to keep my psyche happy. So that's 2 income streams, okay? Number 3, here's a daily Heron Eurodollar. I started testing this years ago. The Heron robot is an old one of mine. I'm bringing it back, by the way. The Heron is back, along with the Hornet, but that's not the part of this video. This one trades on a daily time frame, and again uses the magic RSI pullback. It gets in on oversold, gets out on overbought, but it goes both long and short both ways. It's on a daily chart. Again, it's the Heron. It's only on the Eurodollar. This is only on the Eurodollar, and again, it's all since May 2008. And, well, I see a lot of green bars. Yeah, but I see some red. And, oh my, did not like 2009. Eurodollar did not dig it in 2009. Here's the equity curve, though. Whoa, that's pretty nice. Well over 200%. And a hypothetical, I think it's 15K account is what I did. Yeah, 15,000. Nice. Okay, that's a problem, but it's nice. Those are all different. Forex daily chart. Then we've got the futures, and then we've got a stock ETF. What happens, dun dun dun, if I use my handy Portfolio Architect software? If you put all three income streams together, this is what you get. Where'd they go? Where'd those red years go? They all combined super nicely into a wonderful equity curve of over 600% and no losing years. Okay? Now, it's not like these are three perfect systems. I can do this so many different ways, and you can too, right? The point of this is to learn something extraordinarily important that is simple, and you've probably heard it, and I've heard it. Everybody's heard it, so why don't we do it? Okay? But the power of income streams is right there, and here's the report for that particular. Again, starting with 15,000. There's your profit. Look at that win rate. Where is it? Oh, 77%, and that's across all three. So all three of these are nice high win percentage systems, which of course I like, and maybe you like it too. Works pretty good, huh? Now, what are the settings? I give a lot away for free. Tons away for free. Why do I do that? Because I want to help. I hate the index fund industrial complex. I hate people who look down and point their finger at you and you have to trade index funds. Hate that. So that's why I give away stuff for free. And all these settings are for free too. I'm going to make you earn it though. I'm not just going to give it to you here because then the video would get too long, at least for what I wanted to do today. Now, coming up on June 5th, 2023, depending on when you're watching this, I'm doing a whole week of write-ups on my blog, on my free email list. I'm going to give away all the settings, and I'm going to do this again on a daily heron. I'm doing it again. It's incredible. Give away all the settings for free. So if you're looking for those settings, you'll get that for the RTY. I actually wrote about that already. It's old news. If you go to my website, scottwelshstrategies.com, and go for three free systems end of month. It was on 3/6/23. All the details are there. And for QQQ, Google a fun way to trade QQQ. I wrote about that very recently. 5/26/23, and I will link to those if you want to go check those out for free. Okay, bottom line is this is a humongous takeaway. Multiple income streams instead of diversification gives us a chance to win big and suffer less. It's not new. Why didn't you tell me that sooner? Exactly. Why didn't I tell myself sooner? Now, these three are different, obviously, so you're going to have a Forex account. You're going to have a futures account and a stock account. Maybe that's three different accounts, and I'm sorry for that. And obviously, if you're in three separate accounts, they wouldn't all combine to look as pretty as that. But overall, if you just left them alone, if you added up all your profits at the end of the day or the month or the year, that's what you'd get, right? At least hypothetically speaking, that's what you'd get. Now, if you like this, if you're embarrassed for me and how long it took me to figure this out and to actually do it in live trading, leave a comment. Let me know. That's what we do on YouTube. Leave a comment. Let me know. Leave a comment, and I will do it again. And I might be able to even put different things together and make more money than this. Wouldn't that be fun? So if you like it, let me know. If not, I'll talk about something else next time. Okay? But I think it's fascinating, and I'd love to talk about it more. And, well, April loves it too. So what do you know about that? Thank you, April. Speed round. Please like and subscribe to the channel. It would make us very happy. I mean, look at how happy it would make us. Thank you. This is my website. If you're looking for other trend following strategies, many of which I give away for free, one like this, updated on my website every month. You can go there and check that out. I did write a book on the inevitability of becoming rich. It's an interview I did with a master. Well, I won't say anything. Read it if you like. I liked it, and it helped me. And that's it. I'll be back next month or in the next video. It might even be sooner than next month, but you never know. Plan on next month. There might be a surprise, and I'll talk to you then. Bye for now.